Hello, welcome to this video where we are going to be talking about candlesticks, how to understand it, how to spot the right candlesticks, and how to even trade them using price action. Now, my name is Bolu if you're just connecting with me, and I am a trader. I trade in the forex market and invest in the cryptocurrency and stock market, and I also educate people to do the same. And on this channel we have videos, especially when I'm putting on this KFS t-shirt, you already know that it's time to increase your knowledge. So we have a lot of videos on technical fundamentals and trading in general, and also some personal development. But without further ado, let's get into the video. So now, I'm sure you've seen on a lot of charts, you've seen Japanese candlesticks, you've seen a lot of red and green candles, and they are represented on the charts, right? Now, this represents the price of an asset, a coin or a currency, on the charts. So Japanese candlesticks is very popular. Why? Because it actually tells a story and it lets the trader understand that, okay, this is what's happening in the market, because the market is between buyers and sellers all the time. So how do you identify that this is a bullish or a bearish candlestick? It's not about the color. It's not because it's red. Not when the red candlestick does this or the blue candlestick does it. You have to understand the psychology behind a candlestick. You need to understand that a candlestick has a body, and sometimes, most times, has a wick. This line here is a wick, or some people call it shadow, but I think wick is like shorter, like, and cuter. Wick. Shadow looks like something that is following you. But hey!
Why are you running? Why are you running? Yeah?
So how do you determine that this is a bullish candle and this is a bearish candle? Not by my fantastic drawing, right? But it is actually where the candlestick opens and closes. So a bullish candlestick closes higher than it opens, while a bearish candlestick closes lower. A bearish candlestick closes lower. So you can see this is the opening price over here and this is the closing price. So this is the story behind this candlestick. Price opened here, then sellers came in and took price here, and this is the lowest point the price reached, right? And that caused a wick to form. But buyers came back in and then took price up to this highest point, and that formed another wick because sellers came in and ended the market here. But because the candlestick closed above where it opened, it is a bullish candlestick, and the body too is a lot, and this body of the candlestick represents high volume. Also, the bearish candlestick, we have where price came in. Okay, let me use this color. Price opened over here and then closed here, so the close is lower than the open. And remember that every candlestick forms on every time frame. So each candlestick is opening and closing on each time frame. So 1 hour, every hour, a new candlestick opens and the previous one closes every hour, no matter where you are in the world. So this opened here, then buyers took price up, then sellers came in and drove price down, and this is the lowest that they drove price. So then the buyers came in and but it closed here. Because it closed below where it opened, it's classified as a bearish candlestick. Now that we know how the candlesticks form, we need to understand the context involved in identifying the candlesticks and how to know the right ones to use, because candlesticks actually help you in signaling like the trades that you should take. It tells you where to enter and where to exit, and can also tell you where not to enter a trade. So if, for example, you see a candlestick, you see a resistance level, and then price came here, but there is a bullish candlestick in this area, it shows like you shouldn't enter, because resistance is meant is supposed to be where like there are a lot of sell orders. So when you see a bullish candlestick, it's signaling that that area is an area of interest. You should wait and be patient. So if the resistance zone is going to be valid, it's going to form a bearish candlestick, and that can help with your confirmation that okay, the resistance zone is valid. So candlesticks help with that. They also help with the sentiment of the market, like who is in control of it, right? So when we're talking about the context, we are talking about, number one, you have to understand the location of the candlestick, right? Where is this candlestick at? Is it inside an uptrend, inside the uptrend, top of the uptrend, or bottom of the downtrend? Or is it at the middle of the trend? Because candlesticks are classified into like their numbers and then the direction, like where is it going? Is it a continuation or reversal? So knowing the location where a particular candlestick is supposed to be, right, knowing where it is supposed to be would actually let you understand if this is a continuation or a reversal. If it's at the top of an uptrend, it's signaling a reversal, and then the valid and the right candlestick is there, it's signaling a reversal to a downtrend. Or if it's in the middle of the trend and the right candlestick is there, it is signaling a continuation. Now, any candlestick can form anywhere, but you have to be able to spot the valid ones just to avoid fake outs and everything. If you spot a bullish engulfing where it's not supposed to be, then it's not valid. It's not every single candlestick that is valid. That's why you have to understand the location that they are in. Another context to go over with candlestick is to check for the strength of the candlestick, because some candlesticks you are looking at the wick, the body, or the color. Some is just the body and the color, some is only the wick, some it's only the body, because we have different candlestick patterns. We have single patterns, we have double patterns, and we have triple patterns. So for these single patterns, for example, we have the doji candlestick. I go more into details in my course on knowledge for skills, but yes, this is candlestick. So the doji is a reversal candlestick, right? With doji, you are more concerned about the wick, right? And the concept behind this is that it has the same opening and the same closing, right? So nobody is in control of the market. You actually have to wait. Check for the preceding trend. That's the trend that came after. So if this doji, in this example of doji, let me use another color. In the example of the doji, if it was a downtrend, then it's at the right location, because a doji, or the top of an uptrend, right? So at the bottom of a downtrend where the doji is signaling a reversal. So you also want to wait for what comes after. So you wait for after, whatever forms after this doji is what validates it, whether it's going to transition into an uptrend or continue in a downtrend. It signals that people are tired. And there are different types of doji. We have the gravestone doji and the dragonfly doji. The names don't matter, it's just the psychology is like this. Okay, so price opened here, sellers push price here, buyers push price up, and price still closed here. With this one, price opened here, buyers push price up, sellers push price down, price closed here. Price opened here, sellers push price down, buyers push price up, price opened here. So because buyers had the last say here, this is more valid as a bullish reversal candlestick, and this is more valid as a bearish reversal candlestick. So for the double, we have something like a bullish arami candlestick where we have a big, okay, so the colors matter with the arami, right? We have a big red candlestick, and then we have a bullish candlestick here. So this is a bearish candlestick and this is a bullish candlestick, right? That is small. So this means that the downtrend is ending, right? This is supposed to be, this is a bearish candlestick. Let the grain not confused. So we have a full bearish candlestick and then we have a bullish candlestick. So this signals the introduction of buyers. So you wait for what comes after it before taking the trade. The triple one, we have our morning star. So that's the example of the body, wick, and the color. The body of this candle, the color of this candle, and then the wick of this candle, then the body and the color of this candle too also matters. So this you see at the top of an uptrend, that's an evening star. If you see it at the bottom of a downtrend, that's a morning star. So morning, good morning, goes up. Evening is a bearish reversal candlestick. And I hope like this has helped you to give you some sort of context into your candlestick. So what you need to do now is to go over to your chart, your chart, and identify these candlesticks and back test them, and back test them, and back test them. So I will see you in the next video. That's it for this video. I will see you in the next one. Make sure you subscribe to this channel and let me know if you have any questions or you want me to go in depth in this candlestick patterns, continuation, and the reversal. And remember that I'm rooting for you. Have a nice day.